out of the ordinary insights. Brought to you by Investec Specialist Bank.
Welcome back to Captains of Industry. I'm in the office of the CEO of Sanlam, it's Johan van Zyl. Johan, before the break we were talking about the diversification policy. You got a big pile of cash from your sale of ABSA to Barclays. What interests me more than the diversification is the way that you reacted to the way that South Africa suddenly changed from 1994, where a whole block, the majority of the South African population, wasn't involved in many cases, in the majority of cases, in the financial services industry, and how you went about just coming to terms with that challenge of this whole new customer base.
Yes, we had to change quite substantially, and with the money that we got, as I've said, we particularly focused on the lower end. We bought our biggest acquisition, African Life, but we added Channel Life's African businesses there, forged that together with our own clients, together in a sort of entry-level market offering, and we were fairly successful in that 6-7 years ago. And a lot of the value that you've seen being created in the business actually stemmed from that, because that immediately also gave us a springboard into Africa, into places like India, the whole emerging markets of the world, which is sort of a precursor to what we see today, with many others following. When you bought
some of these acquisitions, you didn't want them to come under the Sanlam umbrella. That's the wrong word to use, because that's a Sanlam logo, but you allowed them to keep their identity. Did you do that because you thought that there would be negative historical connotations for your new target market with the name Sanlam?
In fact, we would like to have moved quicker. We weren't afraid of the historical connotations, but we were afraid that our offering, in terms of what we've done in Sanlam the previous 5 years, making it much more client-centric, was not reflected in the new businesses that we bought. So we had to change them around, make them more client-centric, bring the margins down a little bit, share more with clients, and get the service levels up to scratch. And we were really afraid of losing a lot of the brokers in these new brands. You know, many of them ended up with people in African Life and so forth, simply because they didn't want to deal with the Sanlam brand. So if we were too quick in converting them, we would have lost some of them. But, you know, through the experience and so, we were able to convince the biggest majority, well over 95%, to stay and give us support, and we attracted others. So it worked well for us.
Earlier on you quoted some statistics, 50% of the business being sort of the middle market, mainly Afrikaners, and 3% of your business was in Johannesburg. Can you give us an idea of how those percentages have changed now, and how people have perceived you, and how you've made inroads into the biggest market, of course?
Yeah, if we look at South Africa, I would say about 80% of our policies being sold every year now, being sold to English speakers. Many of them are, of course, black. That's the language of business.
Yes.
And I would say about half the policies, many of them still small, being sold to black people in South Africa. And if you take what we do in Africa and elsewhere, I mean, the original white constituency is still extremely important in terms of policies on the book. But increasingly, looking forward with respect to new sales and so forth, their importance is diminishing quite rapidly.
What about education? I read an article just in the last few days that said that only, I think, less than 20% of people surveyed in South Africa have a decent knowledge of the financial services industry, how to manage money. Obviously, as a major financial services player, you and your brokers, the whole company in fact, and all your networks have a responsibility to educate the person, not just to pick up the phone and say you need this policy, but to teach that person, should that person not be familiar with the way things work, as to why that policy is important to them.
Yeah. So we spend on our corporate social investment by far the biggest chunk of the money that we plow back, and we do plow back a considerable amount of the profit that we make. We plow that back into education, and we start from the beginning. You know, a house is only as good as the foundation that it's built on. So we start with primary school stuff. We sponsor the Takalani Sesame, you know, basic life skills, and a big part of it is financial education. Right through high school into university, we sponsor degrees and so forth, and chairs at many of the universities. But then also, the whole education around our particular product set is becoming increasingly important. And that's where we offer things like Operation Hope, which is all about how do we get our staff. We teach in high schools about the need for education, understanding the product set. You can't wait till people have it. And then once they have the policies, and the financial products that we sell, on education all along the way. So there's a big focus on that. There's a big focus. And of course that focus has now also become statutory with the new financial services codes around BEE. You have to spend part of your profit, a percentage of your profit, on education around your product.
Somebody said to me that for a company to be successful in South Africa now, they have to be in Africa. But we'll come to your Africa policy and your international policy in a moment, Johan. But it seems to me that with so many people probably underinsured and financially serviced, if you like, there's still a massive market to be tapped on our doorstep.
Yes, there is, but not all business is profitable. One should really realize that. We tend to try and focus on segments where we can make a little bit of money for our shareholders, and where you don't get massive churn from your client base. It's not always in a client's interest, if they don't have money now, we would like people to save for retirement and that sort of thing. But if they're struggling to make ends meet now, you're often doing them a disservice. So what they pay has to be related to what is affordable over the long term. And in that context, often you have to look at a broader, African landscape than only South Africa. But because if it's better here than somewhere else, people are mobile. As is money, it's fungible. It moves to where the opportunities are, and we've seen that. And to think that we only can look at South Africa in isolation, therefore we have influx of all sorts of people because it's simply better here.
Talking about competition, you mentioned the word churn, and I don't want to paint any other companies in a bad light, but let's lead into competition now. Lots of companies over the last decade or so have come into the market with strange names and strange advertising campaigns and strange ways of doing things, which sort of flies in the face of the traditional business. What's your reaction? What has been your reaction to the influx of competitors?
Well, I think competitors keep us all honest. I mean, in the end, competitors make us better. And you either, you step up to the plate and you compete with a viable proposition, or you sink. So we had to, as a business, we had to really review the product set and solution set quite closely to see what adds value and what doesn't, and where we're competitive and where we aren't. And we took the knife to many of these so-called basics of insurance, and this is what you have to have, and so forth. And even where we did keep some of the older products, we made them much more user-friendly. People can invest in markets, they have flexibility, they can take money in and out. You make these things much more flexible, so that people, as conditions change, you actually, sort of tailor-made for particular client needs.
That's interesting you say that. As conditions change almost daily in South Africa, in the world, as information technology and people's needs change, and a dissemination of information means that we become more and more informed. So you must have a team of people sitting down and saying, well, I've just seen this, and I've just read this article, and this person said this, so therefore you're constantly reviewing your product suite, if you like.
Yes, if you want to survive and be sustainable, you have to be able to embrace change.
Okay, Africa now. We've spoken about South Africa. Moving into Africa, moving into India. India must be a terribly difficult jurisdiction to manage from here, especially with its different laws. So maybe we could start there.
Yeah, most places outside of South Africa are quite difficult to run. We often think as South Africans we know better and so forth. So we changed our model. In South Africa we own 100% of business. Outside of South Africa we have partners, and we have mainly partners to help us with local conditions. These businesses over there are mainly distribution hubs, but you have to have relations with governments, you have to have relations with your regulators, and particularly, of course, with clients. And this part is better managed by by local people. So we actually a technical partner with a little bit of money in the end. We look at things like governance, we look at IT, we look at the actuarial, the finance, and these kinds of things. And our partners, we also play a role in distribution, and we bring what we've learned and we share the ideas around. But we have a support team from Johannesburg where we support the countries with respect to the core of the business.
We don't have the time to go into the specifics of each different geography and your aspirations for worldwide dominance, but how important is it for you to diversify geographically for the future of Sanlam?
It's really important. If you think about Sanlam at present, you know, and you only think about the new business that we wrote in the last year or two, we've invested around 3 or 4% of our money there. We make about 15% of our profit outside of South Africa, but we write 30% of the value of our new business. And that gives you a picture of what the situation will be like 3-4 years from now, profit-wise. It is a tremendous growth area. The margins are good. Competition is not as stiff as in South Africa. We focus on areas where we have value to add. And it simply drives the overall value of the share.
It's 2013, Johan. You joined as CEO, you became CEO in 2003, that's 10 years.
Yes.
It's quite a long time, isn't it, for a CEO to be in a position? I mean, are you having fun? You must be having fun, otherwise you would have gone.
Well, I'm having fun, but the job has changed tremendously from what it used to be. Initially it was, to fix a few things, then it was to get growth going in South Africa and change in South Africa and to embrace that. Then it was the African step. Now it's a lot to, how do we build a global emerging market focused player, and so that's keeping me busy, and I'm very happy and so forth. But I've been in the job 10 years, but I'm still a young man, so lots of challenges ahead.
Well, this is just as we sort of close this now. I think you're committed to the position until you're 60. So what, another 3 or 4 years to go?
Yeah, 3 years to go from the beginning of the year, but I'll be 59 then, and then we'll reevaluate to see where we go.
And very finally, South Africa, the way that the country is progressing, there's obviously been some bumps, and people tend to think that everything's going to happen overnight just because we have achieved this extraordinary democratic change. Are you happy with the way things are progressing, with one or two exceptions?
I'm very happy. I must tell you that often people tend to focus overly on the negative. We have massively positive things going for us. I mean, I've left the country twice in the past, and it was much darker in terms of the outlook than what it is now. And I think, if you look at the role that we're playing in Africa, the role that we're playing here, we look at the future, and you look at this relative to where the rest of the world is going and where we are. I mean, we've made tremendous progress, and I would really, as a sort of a last lesson or a message to younger people, this is a place where you can build a future. I mean, often we don't want to hear this, and there are things that's wrong, but they're fixable, they are being addressed, and we're not worse than anywhere else. In fact, this is it's a great place.
Let's leave it on that positive note. Johan, thanks very much for your time. That's Johan van Zyl, the CEO of Sanlam. This has been Captains of Industry. I'm Lindsay Williams.